Those that make their home in the UK must pay their taxes here, commented Chancellor Rachel Reeves. So let's break this down even further. It comes as no surprise that the measures contained in the budget confirmed the abolishment of the non-dom regime and the remittance base of taxation, replacing it with a residency-based regime. So for new arrivals, effective April 2025, will enjoy a 4-year grace period during which individuals will not pay any UK tax on their foreign income and gains. Once the 4 years are over, such individuals will be subject to UK tax on their worldwide income and gains. Transitional rules, current remittance basis taxpayers will be able to take advantage of the temporary repatriation facility, which has now been extended to 3 years compared to the previous proposed 2-year period. Such individuals will be able to make an election to designate amounts of previously unremitted and untaxed foreign income and gains so that they are subject to tax at 12% for the tax years ended 5th of April 26 and 5th of April 27, with an increase to tax rate of 15% for the tax year 5th of April 28. For capital gains tax purposes, current and past remittance basis users will be able to rebase personally held foreign assets to 5th of April 2017. For inheritance tax purposes, it has been confirmed that a residency-based approach will be implemented from April 2025. This means that all UK assets and non-UK assets will form part of an individual's estate, where an individual has been a long-term resident in the UK. So in other words, been resident in the UK for at least 10 years out of the past 20 years. The same will apply for those individuals that leave the UK, and therefore the residency-based approach and the 10-year period is quite crucial to determining when UK inheritance tax will be applicable to an individual. The same changes will also apply to offshore trusts, whereby the taxation of offshore trusts will follow the settlor's long-term residency status, thus bringing in previously excluded property trusts into the UK inheritance tax net. Protection from tax on foreign income and gains within settlor-interested trust structures will also be lost for those individuals that are not able to apply and opt for the FIG regime. With all these changes, the government is hoping to raise around £12.7 billion over the next 5 years. We had hoped for some watering down of these changes as proposed in Labour's policy paper in July. It is not what we got. The new regime leaves space for many questions, and as with any new tax regime, the devil is in the detail of the legislation in terms of how it will actually work in practice. For more information, please refer to an article that I've written, which is on our website, for a full breakdown. Watch this space.